Hi everyone, it's Yoni again. Today is Thursday, April 30th, and IGS is finishing or nearing the completion of its 7th week of work from home. Today, in addition to just talking about natural gas and electric prices and energy prices in general, I thought we'd introduce the crude conversation into the mix. We've seen a lot of developments in crude recently, but I do think we should go back about 15 years and talk about the evolution of the natural gas to crude relationship over the years. In 2007, 2008, natural gas and crude were highly dependent on each other in the sense that natural gas really followed crude prices. At that time, crude prices were very expensive. Crude was at around $150 a barrel in 2008, and everyone thought it was heading towards $200 a barrel. At the same time, natural gas prices were off by just a factor of 10, meaning they were at $15 per MMBTU, which seems incredibly high compared to prices today. But then everyone thought they were headed towards $20 per MMBTU. In July 2008, everything changed. The economic crisis meltdown of the country based on the housing market, it hit the country hard. And prices in the crude market and ensuing natural gas prices tanked and plummeted over the next couple of years. And that really kicked off the next decade for natural gas.
I was born in 2010. And I was born in 2013.
Right, so over the course of that next decade, in addition to my kids being born and growing through their toddler years, we also saw a new phase of natural gas, a new decade of natural gas. What that decade was that shale and onshore drilling production that we've seen, the boom of production. And that created an onslaught of natural gas, which really helped deflate the prices and has brought natural gas pricing down to the levels that we've seen today. What's interesting is over those 10 or so years, the relationship of natural gas to crude has kind of changed dramatically. So the other piece to this is, what has crude prices done lately? And as we may or may not know, OPEC Plus, which includes Russia, has had a bit of a price war on crude prices. And that's brought supply up, but prices way down. Well, how that impacts the United States is a bit unique, because the United States is also drilling for crude in our shale plays. And in some cases, drilling for crude is the primary reason why we're drilling, but as an offshoot, as a byproduct of drilling for crude, we also get some associated natural gas that comes out of the well as well. Now, that associated natural gas is not a small amount. It's a significant portion of the supply glut that is impacting our country. However, with the recent downturn in crude prices, we've seen a couple of things, and we actually have to combine it with the COVID crisis. While we have the COVID and the impact to the economy, and we have a capital struggle, some of these drillers are running low on capital and may stop producing, especially when, as a result of the price war, we see really low crude prices. If those drillers stop drilling for crude and in turn stop drilling for natural gas, what that actually means is that natural gas supply goes down or doesn't increase by as much, which causes natural gas prices to increase. So let's recap. Over the past couple weeks, we've seen crude prices reach historic lows. And unlike 2008, natural gas prices haven't mimicked those historic lows. In fact, at times when crude drops to those historic lows, natural gas prices actually tick the other way. They move higher. And the reason is, as we've discussed, while crude is dropping because there's a lack of supply, natural gas is increasing because there's a lack of supply. Now, I think that's a little confusing. Crude is dropping, and we say there's a lack of supply. The reason why crude prices are dropping is not the lack of supply, the lack of drilling, but because of the price war going on in the international crude market. In the international crude market, that price war is causing the value of crude to be so low that it's not worth it for the US to drill anymore for crude. And what that means is we reduce our drilling for natural gas. So we've actually seen a pretty good impact to the natural gas prices for the prompt month, and really the next year, the prompt year, and especially this coming winter, where prices have moved up over the past 6 or so weeks, 7 weeks since we've been working from home, to the tune of about 25 cents, which is just around 10%. So while natural gas prices are going up by about 10%, we've seen crude prices drop off and hit historic lows. So I thought that was an interesting take on what's going on in the market. Might explain why energy prices are up a little bit of late, but at the same time also gives some insight as to why crude prices are down of late. Hope everyone has a safe time during this COVID crisis, and stay tuned for future updates.